All right, good afternoon, boys and girls. How we doing out there? Doc Severson with you here. Ready, Set Live through Ready, Set Crypto on the 25th of September. I'm going to be doing today's show solo again. Mav has got the day off, although I hear a rumor that he's going to be on tomorrow and he has a presentation to give to you. So stay tuned for that. Watch for the invite for that. Now today, what I'd like to do is I'd like to get back to the charts. This is what everybody wants to talk about today. So let's give it a shot here. Let's go out to the charts and let's see, who do we got here? We got Louisiana in the house. Hey, how are we doing out there? What's up? All right, good to see you guys out there today. And let's see who's else out there. I did get a cheesesteak in Philadelphia. Yes, absolutely I did. I got an authentic cheesesteak. I stood in line for about half an hour to get myself a cheesesteak. All right, so there we go. All right, so let's get into the charts here today, guys. Welcome aboard. Good to see everybody with you here. I'm probably going to be on here for maybe 15, 20 minutes. So I'm just going to go over a couple of charts, tell you what to look for, show you how to take opportunities in this market, and then I will be out of your hair. So make sure you have my charts are worthless. Oh my gosh, I love that. I love that. I love to see yours, sir. Okay, so what do we have here? The daily chart, we have the big coiling up. Everybody thought it was going to break up, and it did break down. I love that. So this is what we've been talking about for a couple weeks. We went from high volume node on the volume profile to the next high volume node. So we talked about this yesterday when I was on yesterday, that look out for 8,000, and it got down there before anybody expected it to. I mean, we dropped out of bed from about 10,000 down to 8,000 in the space of a day or two. Pretty amazing. I mean, this, if you go out to the hourly chart, this really shows exactly what's happening. And actually, looking at the hourly chart is really where the structure is for this. So consolidation, range contraction, range expansion, just moving down. We're just stair-stepping lower until we do hit whatever support is to be found. Okay, so, hey, Norwalk, Ohio. My college roommate was from Norwalk, Ohio. Pretty cool little place right near Cedar Point, which is the most amazing place in the country, I would say. Okay, so back to this. Is 8,000 going to hold? I don't know. We don't know if 8,000 is going to hold or not. I believe that if it does let loose, we're going to see support come in at around 6,500. So 6,500 is the next level of support. What I would expect first, and so a lot of people saw a bounce, a lot of people in our Omnia room saw the bounce yesterday from 8,000. It was like they were celebrating already, like it was all over. And I said, no, it's not over yet, guys. What we're probably going to see here is a lot of this kind of like pogo stick activity in this area. We'll probably see a fair amount of, we went range expansion. We'll probably see the price just shuffling around in this area in between 8,000 and 9,100 for quite a bit. Now, this might be a tradable opportunity for you, especially if those of you are using futures or also with options, which I'll show here in just a minute as well too. So you can play the range inside of here. If the price were to break above 9,100, and especially if it breaks back into the 10,000 area again, I think it's heading higher from there. So again, if the price breaks above 9,100 and gets up into the 10,000s, I think it's gone. I think it's gone. Okay, so if it does consolidate quite a bit in here, then we're more than likely going to undercut 8,000. So let me say that again. If we consolidate between 8,000 and 9,100 for an extended period of time, it's more than likely going to undercut 8,000, maybe as low as 6,500. So we have to take these things one step at a time. You don't want to get too far ahead of yourself. You don't want to be predicting something that's 6 months down the road. It's useless, right? So just deal with the market that you have today, deal with the structure that you have today, and then Just take it one step at a time. You can't trade the market that you want, only the market that you have in front of you. So Ramis, I'm not sure how long we are going, but I would say the 8,000 and 6,500 should be good, strong pivots. Now, 9,100, unfortunately, is going to be, and this is that pink line that's right here, 9,100 is going to be resistance until otherwise. So it's going to be trapped in this range, in this area, and more than likely it's going to be trading around in here. I don't think we're going to get an undercut, a high volume undercut of 8,000 right now. There is enough volume that came in and wiped out enough shorts to not think about doing that again. So we may look for, now they should reload at 9,100. The shorts should reload at 9,100 and try to take this thing down again. Cornholio, now that we've closed below 200 EMA daily and 21 EMA weekly, I don't care about the moving averages. I care about the price action. So as long as we have, I would say as long as we're printing higher highs and higher lows, so all of these weekly, this is a higher low, here's a higher low. So I would say as long as we stay above about 74, 7,500, I think we're still good. This thing is pushing as far as it can. And that's what markets do, guys. Markets will push and just, it's almost like a 2-year-old child that will just test the waters to see what they can get away with. And if you've never had a 2-year-old, good luck with that. So volume increase and decrease. So what you'll see is that during a consolidation, if there's a consolidation that happens in between here, like this, volume will decrease during that consolidation. Volume will taper off during that consolidation. And if we do consolidate there, now I've seen it happen both ways. I've actually seen it, if you look at the S&P right now, we had the exact same thing. We sold off, we consolidated, and instead of breaking lower, which is what it's supposed to do, it actually broke higher. Okay, that's what markets do. Markets, as soon as they see, everybody sees the same thing, they will go in the opposite direction. Okay, so what can you do to take advantage of this? Again, can't trade the market that you want, can only trade the market that you have. If you are dollar cost averaging, obviously this is a good opportunity. It doesn't feel like it right now because everybody wants to buy the absolute low tick. Nobody wants to undergo any kind of heat when they're dollar cost averaging. Sorry, it doesn't work that way. So what you have to do is you have to trade either off of a signal or you trade off of time. So dollar cost averaging, you're not allowed to take discretion behind anything that you do. It's supposed to be mechanical. So either time-based, like every 30 days, I'm going to put in $100 or whatever you're going to do, or it's going to be signal-based. I'm only going to look for, say, like an oversold RSI 14 that's down to 20. Whatever you define it to be, you have to still play along with that. So as you can see, if you're dollar cost averaging, that's great. It's usually the really, really bad feeling entries are going to work out for you better over time. If you're swing trading, if you're not already short on this, don't short down here. Wait for a reload at around 9,100 would be a much better place to do that. If you want to go long on here, what I would, if you can, I would use futures on something like this. I would look to get in, get out as soon as possible. Let me show you a quick little setup behind something like this. This is what I use for my futures. If you want to go long, I would wait until you get your first Heikin-Ashi on the 5-hour chart. So what you can also see here is that we're consolidating. Now, if the price does break out above this zone here, if it breaks above 8,500, then you'll start throwing off green Heikin-Ashis over here, and you may get a chance to take this one up, maybe for a little bit or so. Right, but again, I would anticipate that 9,100 is going to be very difficult to break through. So you're going to see swings up and down more than likely in the near future. Usually when we have something that's this strong, it doesn't just puke straight through there. It finds some level of support, it bounces, consolidates, and then gets ready for the next move. Now, people are asking me, hey, do you think the price is going to go anywhere near here? And I have no idea, right? So if anybody looks at you in the eye, in the camera, and says, well, I know exactly where the price is going to be in 6 months from now, that is BS, my friends, boys and girls. Nobody can predict the future. All we're doing is we're dealing with the information that we have right now. I don't know if the price is going to go down to 3,500. This is what everybody wants to know. It's like, well, I don't want to add to my position if the price is going to go lower from here. So please tell me if the price is going to go lower from here. I cannot. All I can do is give you areas that we're seeing some accumulation and areas that we're likely to see distribution. But the price will tell you everything about what's going on. So in other words, if we get to an area here where all of a sudden we start to see the price breaking above 8,500 and starting to accumulate, well, the longs are on for them, but I would sell into 9,100, right? Ranges happen. Range expansion goes into range contraction, and they just go back and forth from there. We're also using the theory of volume profile. Volume profile shows you when a lot of trading activity happens at a certain price, you can expect the price to bounce off of that area or at least find some support in there. It's a very high probability for that. Invest in coal. There we go. All right. So those are some things that you can do in the short term to trade within the range. Now, something else that you can do is, let's go out to our options. What you can do is you can sell options against this. So again, you don't have to be right. So one of the things that I did yesterday was I sold the $7,000 put, and I sold it for 0.04. And right now I could buy it back for something like 0.025. So that's not a bad return in the course of a day for not doing anything, right? So what happens is implied volatility, when the price sells off like that, implied volatility spikes up like crazy, and it's almost like a balloon being blown up. And as soon as the price finds some support and starts consolidating, the implied volatility comes back down in, and that option price goes like that. So I sell options into the fear. And it's a great trade. It's not easy to do because it feels terrible to do something like that. It feels absolutely horrible, but if you've been doing something like this, if you've been staring into the teeth of the monster for 15 years and doing the same thing over and over and again and not getting run over by it, that you start to build those habits of looking for the fear to sell into. Now, something else that you can do, so that one I do intend to look for a little bounce to go back up and then buy that one position back and close it out. Something else that you can do is if you're trading with like Ledger X is another options company. So if we go out to Ledger X, they do physical settlement of options. So if you want to buy more Bitcoin and get paid for the pullback, here's an example that you could say, well, look, I want to buy Bitcoin at 7,500. And at this point, you could get paid $250 per Bitcoin. You can figure out the return on something like that. Wait, let's do that. I think, so 250, I think it's going to be 3%. 7,500, yeah, it's 3.3%. So that's a 3.3% return from now until October 25th. And that's physical settlement. So it doesn't matter what happens to the price. You will get that 250 into your account from day one. If the price comes down to 7,500 and then bounces from there, you don't have to buy Bitcoin at 7,500 unless you really want to. If the price goes lower than 7,500, you're still buying it at 7,500. So that's physical settlement. So it's a little bit different twist on what happens in Deribit with the options there. Okay, so I'm going to go back through some questions here. So we talked about dollar cost averaging, we talked about swing trading and what to do with that, and we talked about a couple of options scenarios here where you can use options. You don't have to be right. You can just be in the ballpark and you can still make a nice profit by doing something like that. So very, very powerful strategy using options. And we recently did the options masterclass on her. Okay, I'm going to go through some questions here for about the next 5 minutes and then I shall be out of here. Okay. So
here are the top search results.
Oh my, Google has picked up on a keyword here. Okay, so Hourglass has got a great question here, and maybe this really goes into the next class that I'm going to teach, which is around probably the November-December timeframe, and it's going to be around how do you set up your life, how do you organize yourself, how do you become a professional trader, those kind of things. How do you organize your life so you're utilizing the maximum efficiency of your time and not just staring at charts, wasting time, and possibly wasting money with the board trades? Made this mistake. Okay, so what I will do a lot of times is I will define certain windows that I will do trading. So for instance, I like to trade the NASDAQ futures in the US from 9:30 in the morning to 10:30 in the morning. I put a 1 hour window on it, and I don't want to trade past that point, because if you're not doing well by that point, you don't want to waste all day long trying to dig yourself back out of a hole. It usually ends up worse than that. So I allow myself 1 hour. I basically got a zero, I forget exactly the term for it, but it's a zero edge calendar, right? So I've got every minute accounted for in a day. And at the end of the day, you've got to just shut off, because otherwise you're going to be up all night. The other thing that you can do is make sure you use limit orders to get yourself out of a position so you're not trying to figure it out on the fly. That also means that you have to define your exits before you enter them, which is what I call rule number 1 of risk management. So define your exits before you enter them. And you'll find that a lot of positions will just sort of close themselves with normal volatility, which is great. And you don't have to sit there and babysit them and manage them and wonder what to do. And then the other thing too, again, this is such a great question, Hourglass, because this is how money is made. You have to figure out what it is that you do. So a lot of traders get involved with a lot of different things. They want to trade futures, they want to trade options, they want to do dollar cost averaging, they want to do swing trading, they want to use 15 different studies on their charts, right? So they end up becoming a jack of all trades and a master of none, right? You have all this activity, you have all these things, you're juggling all these plates up in the air, and what you find is that over time, you're just not going to make money like that. You might win a few here, you lose some few here, things happen, you weren't watching it at the certain time, right? It's just very difficult to do all that stuff. So find what really resonates with you. Find a strategy or even one thing, and this is what I call the one thing strategy, that when I ran into the same thing, because I was the typical guy that, I was involved with everything, right? But I wasn't making any progress. And so what I had to do was just literally wipe the table off and say, I'm going to trade one strategy, one chart. One strategy, one chart, that's it. That's all I'm going to do until I'm profitable. I'm going to focus myself like a tip of a spear into one thing. And you'd be surprised how quickly that you can master one thing. And when you're looking at one chart, one strategy, you define yourself with getting better at one thing. All of a sudden you can get much, much better, right? If it's just you trying to take Utah Beach, you're not going to be able to do it by yourself, but maybe you can take 10 or 15 feet of it by yourself. And that's the approach that you have to take with trading, is that you have to build those skills one at a time. You have to define what it is you're going to do, because don't forget, you're trading against the best in the world out there, and they have an edge and you don't, and you won't have an edge until you specialize into something. So terrific question. I could probably go on for hours on this stuff. This is one of my favorite topics. All right, couple more questions here. What do you think will be the best case use for Bitcoin in the long run? Will it always be a stored value? I don't know. That's really a Mav question. He's much better at that. I just look at the price chart and I say, what's happening with the price chart? I try not to figure out what's happening in the future of it. To me, an asset is just an asset is just an asset, right? Everything's got a price chart. The price is the final arbiter of value for everything that we get involved with. So there's so many religious arguments that happen out there in terms of, hey, my tribe is better than your tribe, is better than my project, is better than your project. And it doesn't really matter. It's what the market thinks that's going to put the money in your pocket. So I try to avoid all that stuff and just look at things from the price perspective only. And this is something, I go so far as to not even look at fundamentals for stocks anymore, because it doesn't matter. If they're printing money like crazy, it just doesn't matter anymore. The fundamentals have gone away. Okay, let's see. Crypto Darthmark, any Ethereum futures long or option strategy for Deribit? Yeah, you can use these on Deribit as well too. Let's get the right thing here. Okay, so Deribit has got not only Bitcoin but also Ethereum options and futures as well too here. So it's actually not bad. Here's the Ethereum perpetual 5-minute. We're getting a nice little rally up here. That's good. And it's also got just as many options in here. And actually they're not bad in terms of liquidity, and obviously the notional value is so much smaller, so it's a good place to start. I just don't have any Ethereum capital parked into Deribit at this time to do any trading on. So, but there's nothing wrong with that. Yeah, getting a little bounce right now off the bottom. Okay, any idea what would happen with the alt market? I think the alt market to me represents the same exact thing that happened with the technology boom and bubble. Gosh, guys, almost 20 years ago. I mean, that's something that I lived through. I lived through the technology boom and bust, and it was really difficult. It's like a forest fire. Just everything got burned down to the ground, and then finally some little saplings started to grow up, which were called Amazon and Facebook and Apple and things like that. And the same thing will happen to the crypto market, quite unfortunately. Really, the alt market has never emerged from the bear yet. And like I say, with all the price discovery, it will push and push and push until you can't take it anymore. And then it will push just a little further to make sure that everybody washes out before this thing will bottom. Let's see. The halvenings, yeah, I don't know what the halvening, people have assigned a lot of weight onto the halvenings, and it should happen fundamentally because that's scarcity, but scarcity doesn't matter if you don't care about the asset. So price discovery is price discovery. It doesn't matter what fundamentals show. Let's see. Let's take 2 more questions and then I will bid you guys adieu. Let's see. If you look at the BTC EUR, there's a weird candle. There's a weird candle just after the plunge. The price spiked all the way back up to where the dump started. I don't have that. I don't have that on the BTC. Now, I did see something similar to that on one of the exchanges yesterday. I think it might have been Coinbase. But I don't have that. So it's going to be, it's almost exchange related to that. Let me see if it's actually on something like a 5-hour chart. Oh, there we go. So Coinbase did show that. So let's see who else had it here. Yeah, so you were seeing that on Coinbase. That is an artifact, my friend. That is an artifact. So a lot of times the price didn't actually trade up at 9,100 at that point. So that might have just been a fat finger or some other issue like that. I wouldn't put too much weight into it. Okay, let's see. LP Toshi, what are your expectations in the coming months for crypto? Well, until this turns into a downtrend, I still believe that Bitcoin will trend higher into the end of the year. And this fits the pattern for me of a major head fake. This is what I've seen for major head fakes. So that's still my thesis on this, is that BTC is in a bull market, regardless of what fiat that it's traded against, and it should trade higher into the end of the year. And right now it's testing everybody. It's testing everybody's resolve. We've coming down to very close to the 61.8% retracement, which is right in line with 8,000 again too. So this is what I've seen before. I've seen this happen more times than I can count, where this consolidation, everybody expected to break higher. It actually breaks lower, head fake. Go back to July of 2017. We had the same exact thing happen. What are the percent chances that we drop further to next support? I don't know. I don't know. That's all depending upon how the price consolidates around between 8,000 and 9,100. How much are the whales currently affecting the market? I have no idea. I have no idea. But certainly the institutional bulls are going to be necessary for this thing to recover. You got to get the price down here to the point where there's blood in the streets before they'll buy. They do not buy breakouts. They don't just buy just to buy just because they think the price is getting away, or just because they think the price is going to be up at 100,000. Right? So until some institutional money starts coming in through mutual funds or ETFs or some other back-end funding mechanism for that, where they have to put money into it, they're going to be looking for maximum edge, And you guys haven't seen it yet. We haven't seen maximum edge yet. Okay, so I want to thank everybody for hanging out with me here today. Hopefully that puts a little bit of structure on what you can do to look in the market. Again, stay out of the news. Stay out of Twitter for looking for, because everybody wants to do that. Everybody wants to please tell me what's going to happen tomorrow. Please tell me what this market's going to do. You've got to find a way to get away from that. You've got to find a way to make your own decisions based on what you see in front of you. You cannot socialize your market analysis, because how are you supposed to be in the top 1% of the traders if you're using the same information as everybody else? That automatically puts you right in the middle of the herd, and you're going to suffer the same pain with everybody else. You know, it's actually fun to make money. It's fun to make money, but you have to think differently. With that, thanks everybody for hanging out with me here today. Don't forget, Mav is going to be on here tomorrow. He's threatened to come on here tomorrow at around the same bat time, same bat channel, with a presentation on who knows what. I don't know what. I'm gonna stop by and watch, just because I can't wait to see what he's got to talk about. Thanks everybody. Hope you're having a good time. We'll see you soon. Take care.